Hi, it's Ben Morton here, Head of Global Listed Infrastructure at Cohen & Steers. Today I'd like to talk to you about the infrastructure stimulus plan as proposed by President Biden on March 31st. So as you all know, it's been in the news quite a bit, $2 trillion spending plan, really spending and tax credits focused on fixing our deteriorating infrastructure in the US, focused on renewable energy, and frankly focused on a lot of social infrastructure as well. As we know, there are offsets to the spending side of the equation, which tend to be tax increases, as we know. So this is something that we're analyzing as we think about our listed infrastructure universe. So first off, it's our view that it is likely that through a reconciliation process, some elements of this plan will be passed either later this year or early in 2022. Likely to be diluted and watered down from the version that has been proposed. At the same time, so will those tax increases as both sides come to the table and start negotiating the ultimate outcome here. So we do think a bill is likely to get passed. We think it's likely to get passed again later this year or early next year in a more diluted form. So first, what are the impacts on infrastructure, the key element here? We think there's a clear positive impact from some of the policies put forth in this plan and the focuses of this plan. So three different ways. First, renewable energy. Tax credits, incentives for developing renewables, whether it's tax credits for traditional wind and solar, offshore wind, the encouragement of offshore wind, but also you think about transmission supporting those investments which will be needed. So a real investment opportunity not only for pure play renewable companies, but also utilities that are very active in the renewable space and companies that own transmission, connecting these new sources of wind and solar to consuming regions. So, we think there's a real tailwind behind renewables as it relates to both, broader global trends, but also this specific infrastructure package. The second is really a theme that we've talked about quite a bit, which is the digital transformation of economies and support specifically in this plan for providing broadband service to rural areas, which in our mind expands the opportunity set for cell tower companies as we continue to see a push for, again, broadening access to broadband. This will be something that can mean more investment opportunities for tower companies in our universe over time. The third piece really is, I'd say, a little bit less direct, and that is, to the extent that we see this type of stimulus package, $1 trillion, $2 trillion moved into the economy, this is something that will stimulate economic growth. And there are many parts of our universe that can stand to benefit from improving economic conditions, whether it's freight rails as more goods are moved around the country, marine ports as more goods are moved around the world. So we think the economic stimulus provided by this type of infrastructure proposal will have, again, tailwinds for the more economically sensitive parts of our infrastructure universe. So in sum, we think there are some real attractive tailwinds for infrastructure today. This only, sort of adds to that case in our mind. You think about, the last thing here, which is inflationary impacts of these types of stimulus packages. Infrastructure tends to outperform its historical average return in periods of unexpected inflation or inflation that's above expectations. So that's a period when equities and fixed income tend to underperform. So we think the macro setup for the asset class based upon this proposal and so the follow-on effects of this proposal are very attractive. So with that, I'll end. Happy to catch up with folks if they'd like to discuss further. Thank you.